Hey traders, Nick looking at Micron reported today is 12/20, Christmas week. Merry Christmas, happy holidays. Can't believe it's here. Wow, what happened to the year? Okay, so Micron reported, and so far the reaction after hours is positive. Don't care what they said because what they're pretty consistent with their delivery. What they say is not going to really matter to their bottom line because their outlook is relatively stable and the fundamentals is not their issue right now. So the markets, they are stuck in a weird market situation where the fundamentals are super strong because of artificial infusions, interventions from the Fed and the White House, which kind of like muddies up the water. The S&P is like a couple of ticks away from an all-time high. Last week we established like 3 new all-time highs, whereas the small caps is down 13, 14%, 15% at today's low from the all-time high. So one market wants to correct, the other market wants to break records. They're in a tug of war there. This one is kind of stuck in the middle, and it has its own issues with supply, demand, or whatever, supply chain. Maybe it does, maybe it doesn't, but that's what the thought is. So there's apprehension all over. In spite of that, this is still holding pretty well. So what can we make of the price action and what's next? This is the point of this video. I'm not telling you what to do. This is not a trade alert. By the way, if you do like this video, give it a like and subscribe to the channel if you're not already subscribed. It's still free for now. And my point is to point out to whoever doesn't know charts very well or not confident or just want a second opinion, where I see lines that will matter. That doesn't mean that's where price is going to go, but I tell you, if it goes there, what is likely going to happen? So right now, price is right here after hours. I see it up $5 and change at 87 and change. So this is where it is inside of prior failures for quite a few days. This is a daily chart. Last week was pretty difficult for the market overall, so for it to be this close to that is somewhat of a mini win right there. It fell into support from level perspective and from volume perspective. I'll explain that in a little bit. But the point is, what happens tomorrow and past tomorrow? Is this a point of entry? I would caution against chasing blindly at the open tick, just because it was there before for the last 10 days, and every time it was a disaster. So I don't want to be the other chump that says, this time it's different. It's not different until it is different. And I'll give you one line that's going to matter a lot. Can you tell which one if I don't tell you what it is? Yes, it's that orange dotted line. What is that? It's my alert for this one. Nice line. So why did I pick this one? Because it's that? But no, not just that. Look left even further. What the hell is this? This was a huge pop out of nowhere and an immediate rejection that started this whole correction. If you don't pay attention to this candle, then you don't care about charts at all, and why are you watching this video? The fundamentals are what they are. They're fine. They're not superstars. Look at the P&L, but they are leaders in their industry. So the fundamental story is not the problem. The price action is what we're discussing here. This is not an obvious entry point at the open. I would be leery against all these failures, and most importantly this one. What would get me inspired? A close above that, and perhaps a retest of that. But you're going to miss out on so much. Fine. I don't want to be the idiot that got here and had to close here. So if I miss out, so be it. I'm in it for the long term. I have hundreds of other tickers I can trade. Today we traded the IWM and the live room. You should have been there. It was insane. It was really cool. All day we waited, we drew lines, and finally they materialized late in the day. Let me see. This was the arc we were tracking on the VXX. That gave us the go-ahead on the IWM that played out in this beautiful manner. And a 30-cent bet tripled for somebody that timed it right. Doubled at least for everybody that took it. So that was an easy setup. We waited all day until we tracked the progress. We said what needs to happen to bottom and how we track the the bottoming process as a process, and how the VXX fear dies in order to make that happen. These lines were drawn ahead. Like right here, I drew this green line. What am I saying? I'm saying that all this price action, sorry you can't see that. There we go. That's what the IWM rally we caught from here on out. So charts are predictable to a pretty high degree because of machines. They do most of the trading, so that makes them predictable. How could I have drawn this in front of 150 people in the room and it play out exactly how I said it would? Same with this. I didn't know the direction of which, but I knew what needed to happen in that direction. So charts matter, and that's what I'm trying to instill here. Support anywhere below 82. That's what these tails say. This is where the machines will also start buying. That's why I have an alert from myself. This is where I personally would get interested in it, personally. But doesn't mean I need it to go there, but I'm okay leaving it, go wherever it wants to go until it triggers either a solid place where I can bet against falling further and a solid place where I can chase it. In between, it can do whatever it wants. They're not high percentage trades if you want to hold it. Intraday, sure, you can trade it. If you're a fast trader, I could have given you a breakout here and a buy the dip here for the breakout here. So it is tradable. But if it's a longer term swing, you need to pay attention to what the charts are telling you. At the open, I wouldn't buy it. I would onus is on the bulls to break through these past failures. Now, what would make them do that? A strong open in Micron, a strong rebound in the markets, and some follow through on Wednesday going into Christmas. This is not going anywhere if we have a day like today again tomorrow, which was down 1%, VIX up 8%. Mind you, this is a tremendous improvement off of what it started out with. So Friday's scoreboard was the messiest scoreboard I probably have ever seen in my life. The VIX was up 5%, I think. The small caps were up 0.7%. That's a basket of 2,000 stocks. The NASDAQ was slightly down, and then the S&P and the Dow were very down, very red. It was a complete mess. Nobody knew what the hell was going on. Monday started out pretty messy. The small caps down almost 3%, and VIX is up 20%, and then finally it normalized. At one point, I think it was, last time I checked, I'll check again after this video, it was up big on the VIX, like 8 or 9%. Normal when the indices are all down in line with each other, just over 1% or just about 1%. That is a normal price action. It's good to see normal again. You're saying, but this is so bad, such a bad scoreboard. It's not. When the VIX is over 20, I should expect plus or minus 1% moves. If I don't, that's weird. So the VIX was over 20. So that was normal price action. Finally got in line. So maybe Micron will have leeway to burst out. So let's look at the fundamentals. Fundamentals do matter, but what I was saying is that they didn't change much in the last quarter. Price to sales 3.5, PE 16, so not cheap from that perspective relative to itself. Like they're cheap, they're not expensive in absolute terms. 16 PE is not very high, but relative to itself it is. So let's see if it's justifiable from the income statement. Revenues 27.5 billion, so there's growth. Gross profit, there's improvement. Net income, arguably flattish if you average, 5 billion, 14 billion, 6 billion, 3 billion, 6 billion, 6 billion. So the running 12 months is the same as 21, that makes sense. So the year is almost out. So last year, even though it was challenging, they still eked out 3. So there's nothing wrong with the business. That was my point. So it's all about the charts right now. And jumping in up here is playing the odds, putting the odds against you. Yes, you have momentum from an up day. I hate chasing up days. I don't want to be the sucker buying this guy's profit or bailing this person out. Thank God we're back here. I'm out. I don't want to be the sucker giving them an out. I'll chase up there, buy high and sell higher. That works for me. Also, that would be like a giant cup and handle of sort, which would need time to unfold. So if you're not a day trader or not a fast swing trader, if you're patient, you have a long recovery. These are weeklies, and then another long recovery, and you break out of here. You confirm that breakout. The target is like up here with a huge hurdle up here, but at least you have a target that you can chase. So this is the area that scares me to chase into it, and that's where it's looking like it's going to open. So caution chasing the open. Let it open, let it fade. If you get a fade like at least halfway, then you give yourself at least another 3-point leg jump on the person that chases the absolute open. My 2 cents, not a trade alert, of course. This is a weekly chart, 5 years. So the bulls are in charge of this chart. So the method should be, what dip do I buy? And unfortunately, for the last month, it's been stuck in a range. You break out of that range, they'll extend another leg higher, but they have to really cut through some pretty tough resistance. They did it here. Look, we may be here. I would forego this next few bucks in order to get confirmation that indeed we were here. All right, signing out.